I started researching multifamily, I found that, your money can grow a lot faster and it just feels more safe. People are always going to need a place to live. And with apartments in particular, no matter what the economy is, if the economy goes south at all, people might move out of their houses because they can't afford it and they're going to move to apartments. And we really specialize, my team does, in B and C class assets. So they're value add assets, and these are working class people.
Hello, everyone. We're Jacqueline and Melvin Landry, and we welcome you to our podcast, Get Diversified. Throughout these series, we'll cover all the topics and questions you have about investing in apartment buildings, storage facilities, and mobile home parks. Being knowledgeable in these areas will help you feel more comfortable about investing. Apartment investing equals building wealth. Building wealth equals financial freedom. Achieving financial freedom allows you to spend your time with building memories with your loved ones. Let's face it, time is the one element in life that is limited, and you don't want to waste it.
Hello, everybody, and welcome to Get Diversified. My name is Jacqueline Landry, and I am super excited to be your host today. And I have a very special guest, Lisa Landry. Lisa is a multifamily owner and interior design, and she also owns an interior design company. So welcome, Lisa, to the show.
Thank you for having me. I'm so excited to be here.
So first off, I want to tell our audience that even though we have the same last names, we don't think that we're kin to each other, but maybe somewhere down the line, possibly we are. So anyways, I thought that's a fun fact. So when we found out we were both Landrys, we became connected, and we are part of the same mastermind group. So happy to have you on our podcast and really talk about your real estate journey and all the great things that you're doing. So let's just jump right into it. So what excites you about investing in commercial real estate?
I love commercial real estate. My family is actually in real estate. My dad is a commercial realtor. My son invests in real estate, more like single family homes and even residential assisted living. And I had never done that. I'd always just invested in the stock market and, kept savings and things like that. And when I started researching whether I wanted to invest in real estate, I started looking at all the different asset classes. And it's really my background, 15 years of decorating, having an interior design firm that specializes in decorating multifamily projects across the country. As I started looking at, do I want to invest in single family homes or self-storage or mobile home parks or commercial properties. When I came across the asset class of multifamily, I just thought, well, this is something that I know. I've been working on these projects for a long, long time now, and it would be an easier learning curve for me to invest in multifamily. So I just started deep diving. I started listening to every podcast I could, watched every YouTube video I could. I call it going to YouTube University or Podcast University, and reading every book that I could. And then I found a mentorship program. So I think the thing that excites me the most is that you can scale it so quickly versus with residential, single family homes. You can get a lot of doors quickly. The other thing I really like about it is you don't have to do it by yourself. It's like a group event where we have different GPs that handle different parts of the process of the acquisition and the management and the disposition of the asset. So I like that team component of it. I think it's really fun to bring a lot of people together and to have all different skill sets so that we, bring different things to the table. I think that's really fun to have success as a team. But then the thing that really kind of pushed me over the edge was the tax savings that I had the, capacity to reduce my tax burden because I have, another company that have a relatively good income. I was trying to shelter some of that tax. And with multifamily, because of the way things are set up and the way that we can get depreciation on the asset, you can have some tax savings in most cases. So that was a big, aha moment for me when I learned that I could also have cash flow on the asset most likely, and like a big kind of chunk when the asset sold. But in between, having that tax savings was important for me.
Yes, yes, fantastic. I was just talking to somebody the other day, and I said, I think we're going to get close to putting in an LOI, and they said, well, how much is it? And I was like, 7 million. Not sure where our number is going to come in. And they said, oh, you're going to do that yourself, and you're going to manage it. And I said, no, no, no. So, and this person was an investor. So I thought to myself, wow, investors don't even know about the syndication world. Investors don't even know about the tax savings or the cash on cash. And this particular investor only knew about debt coverage ratio and was doing everything himself. And so even when you're in the multifamily space, it's so crazy to me that a lot of investors are not as savvy as folks like, you and me, and that understand, you can get cash flow, tax savings, and a big chunk of money when you exit or sell the asset. So yeah, that's crazy. But thanks for matching that or mentioning that. So what makes a top-notch rock star, super grounded sponsorship team or general partnership team?
I think that's the most important question because when you look at investing in multifamily, you can start as a limited partner, just an investor. And I think that's super important to do and go through that process. But if you decide you want to be a GP, a general partner, and be part of the ownership team, it's really finding, first of all, who do you click with? I mean, personality wise, this is seriously going to be like a 5 to 7 or 10 year hold in many cases. So it could be 3 years, it could be 5 years, it could be 7 or 10. And do you enjoy working with that person for that long? It's what we call like a marriage, really, because you can't just leave. You're part of this group. And so having personalities that really mesh, I think, is super important. Then the next thing is finding people that are different than you, that offer different skill sets than you. So you really need a great acquisition person that has strong relationships with brokers. Then you need a great underwriter, and that can be the same person or a different person. So someone who loves just sitting in front of spreadsheets and just doing the underwriting day after day after day. And then you need, somebody that's really strong in lending, figuring out the whole lending piece of it. And then once you've acquired the asset, who's going to manage it? Who are the asset managers going to be, or asset managers, sometimes it's singular, going to be? Who's going to oversee the CapEx? Who's going to oversee the financials? And then who's going to make sure that the marketing is done. There's all kinds of investor relations things that have to be done. So the marketing piece of it, and then the disposition at the end, who's going to handle when you sell the property. So there's lots of different components, and you have to put together a GP team that really has a great handle and great skill set in all of those spots.
So what's your area of expertise?
What
do you enjoy doing?
Yeah. And there's also capital raising. I didn't even mention capital raising during.
Oh yeah, that's one of the biggest parts.
That's a huge part. So I was a capital raiser, but I'm also, because of my design background, I'm also the one who's overseeing all the CapEx. I'm also an asset manager, so I'm on the weekly calls with the property management company. I'm doing the investor emails. I'm doing a monthly newsletter for the property itself for the residents. I'm helping put together all the events that are at the property. I'm overseeing all of the renovations, all the design changes. I'm doing on-site visits every 2 weeks to the property, making sure that everything is going smoothly, checking unit turns, looking at all of the amenities on the property to make sure everything's maintained well, visiting with the on-site team to make sure that they're pumped and appreciated and excited and enthusiastic as we've raised the tenant base and rents and all of those kinds of things. So I have a lot of different jobs, and that's what most GP teams do, is they have several jobs that they do.
Sure. So you got another job by becoming a general partner.
Yes, you definitely do. Limited partner is just invest your money and watch it grow, and you don't do anything. You just kind of maybe watch for those monthly emails, keep an eye on everything, make sure everything looks okay, ask any questions that you may have. Being a GP is definitely very, very time intensive. And that's something that you have to be aware of going in. If you have a full-time job, are you willing to do this nights and weekends, to keep up with everything you have to? Or do you have a job where maybe you could work half-time that job and half time this job. And it depends on how many properties that you acquire as well. Just having one, and I have two now, but just having one is very time intensive.
Sure, sure. I always hear people, that join different, different groups that I'm in that are gung ho about, oh, I don't know much about multifamily, but I want to get in and I want to be a GP. And I always go, oh, please don't. Please start slowly, get into be an LP, learn the business, learn what you like that the team is doing, and just ease your way into becoming a GP because it is a lot of work. Just recently, so I don't know if you know or not. So in the last 18 months, we're in 11 deals. So 9 of those are passive. 2 of those were co-sponsors or co-GPs. But, for the first time, actually yesterday, so it's the August 9th, 2023, I submitted the first LOI on a 90 unit in Pittsburgh. So I don't know if that's going to come to fruition, but just taking it a step further and going through the process that beyond underwriting, which is my expertise, is just, again, so much more to know when you're putting an LOI together. Who's your team? Do they agree with it? All that kind of stuff. And that took me probably, I don't know, 7, 8, 9 hours and working with another partner. And I think people just don't realize the time commitment involved in what the general partnership team does.
Right. And it's not that you're just buying the property on your own. You have all these partners that you're working with, but you also are raising capital from investors. And so you have to go above and beyond, what you would do for your own money to make sure that these investors' money that you're taking, or the investors' money, is safe, and that you're doing a great job, and that you're preserving their capital, and you're, improving their capital. So it's a big burden to be the GP. And I think your point is great, that you don't want to just jump in, and learn as you go. You really want to invest first passively so that you can see how the whole system works and see all the pieces and parts, and then co-GP with a team where maybe you're just contributing a small amount, and then, keep growing from there to make sure that you preserve your investors' capital.
Sure. So Lisa, why do you invest? Like, what's your why?
It's really for legacy wealth. It's really so that long term, I know that, my money is safe. When I'm looking at real estate, it's a tangible asset. I had always invested in the stock market, which is a paper asset. And there's so much volatility there. And I was really stressed, like watching it all the time and trying to figure out which stocks I wanted to buy, and having a financial advisor help me. And that money was just growing so slowly. And so when I started researching multifamily, I found that, your money can grow a lot faster, and it just feels more safe. People are always going to need a place to live. And with apartments in particular, no matter what the economy is, if the economy goes south at all, people might move out of their houses because they can't afford it, and they're going to move to apartments. And we really specialize, my team does, in B and C class assets. So they're value add assets, and these are working class people. There's a value add component to it where we can take an asset and improve the asset itself, and improve the community for the residents who live there, elevate the tenant base, increase rents, proportionally. And then when we sell the asset, it's worth a lot more, because the way multifamily is valued is completely different than residential. They're not based on comps like residential is. No matter what you do to your house, you can only elevate it a certain amount. With multifamily, it's really based on NOI, which, the net operating income. And so if we can increase income and decrease expenses, then the value of the property goes up, and then we can, sell it when we're ready. So I just like the model. I think it's so much safer than the stock market. And again, that it's a tangible asset, that it's real brick and mortar, that it's not going anywhere, and that there's so much more potential for an increase in addition to the tax savings that we talked about.
Sure. I know I was talking to somebody probably a few months ago, and they said, well, I think rents are going down. I said, okay, they may be going down a little bit, but the majority, 98% of the people, have never seen a rent reduction since they've been living in an apartment. So, and like you said, real estate always appreciates. It may appreciate at a different speed right? And so that's why it's so important that as a general partnership team, you're keeping an eye on and you're making good decisions on what to improve in the building. Because if you over improve and you spent a lot of this money doing all these great things and can only get another $50 or $100 out of a customer or out of a tenant, that may or may not make sense, right? So being savvy on doing what makes sense for the building, so that at the end, when the asset is sold, that you're giving the investors back what you proposed originally is super important. So we always try to underwrite these deals. And for those that don't know what underwriting means, it just means that, we put together basically a plan that tells you what we're actually going to do to the property and where we plan on being when we sell the property, and how long we're going to hold the actual asset. So when we underwrite, we're super conservative. We're super conservative on the rent growth. So that means we're not putting 5-7% rent growth. We're putting 2 or 3, right? And when it comes to the expenses, some folks may say, oh yeah, the expenses are going to increase 1%. Well, we're very conservative on that. We like to go a lot higher. So we at least go like 3 to 4%. And this way you have a little bit of a wiggle room, especially with all the supply chain issues that are going on in this world still, as a result of COVID. So, being super conservative on underwriting is big for us. And that's one of my roles that I play on the team. All right, cool. So that's your why. So you want generational wealth. So why do you think some people never take the leap of investing in real estate?
I think they're just scared. They don't really know, and they feel like they don't have enough information maybe to make the decision or the leap. They call it, analysis paralysis, where you can keep learning and learning and learning and learning, and you think you're never going to have enough information to make that decision and jump. But I think you just have to make an educated decision. You just have to educate yourself enough to understand what you're looking at. Talk to other people maybe who have invested. Talk to the general partnership team if you're considering a limited, partner investment, and just try it. The odds are so high that your capital would be preserved in this industry and
Right.
and increase, and grow, that I think it's a very safe investment from my standpoint. So when I did my first investment, I was so scared to like pull the trigger. I was just so scared, like, whoa. But I mean, I did it very quickly, actually. Once I started learning and kind of got a grasp of the industry a little bit, I felt like, okay, I've listened to somebody on a podcast a bunch of times, and I just felt comfortable with that person. And so I invested. They actually ended up only holding that asset for about 2 or 2.5 years. And I had a 40% return in that 2-year period.
Nice.
Where with, my stocks, I was lucky to have like an 8 to 10% return a year. So I was super happy with that turnaround time, and then moved on to the next phase. So I think you just have to make an educated decision and just leap. You can't sit on the sidelines forever and play the game. If you want to be in the game and win the game, you have to actually get in the game.
Sure. So when you're syndicating or going out to investors, do you try to attract folks that have never invested in real estate? So I would say uneducated investors, or do you try to just kind of reel in the savvy investor?
Yeah, it's a good question. And it may be different in my case because I have my interior design firm and I've had clients for 25 years. And these are people who are high income earners, but most had never invested in real estate before, and none had invested in multifamily. I just happened to reach out to them when I started doing my capital raise. And, this is an amazing opportunity, and it's a very limited space for the number of investors that can come in. And I just reached out to them and just said, this is what I'm doing now. They had seen that I'd been attending a lot of events like on social media. So they knew I was doing this, but didn't really know anything about multifamily investing. And so just getting on the phone or having an in-person meeting with people to explain sort of what this industry is, why I decided to get into it, what the benefits are, what the risks could be. You have to tell them everything.
Yeah,
and
we have to tell them
just explain everything. And then it's an opportunity that you're offering to them. So you have to be invited into this world. It's not, we do 506B raises, which means you have to have a pre-existing, relationship with your investors. That's what the Securities and Exchange Commission requires of a 506B investment. So you do have to have that relationship. And most of them, like about 75% of the people that I reached out to invested in that first deal that I had. And most of them really didn't want a ton of information. They trust me. They know me. They know that I'm not going to offer it to them if it's not a great, opportunity. And they felt honored to be asked and invited in. And then on my second investment, probably about 80% of those people came over to the second investment also.
Wow.
So it's just a way for them also to, hedge inflation, a hedge against inflation, help with some tax savings, and plan for their generational wealth. And they just were super excited to hear about it.
Wow, that's a great track record. So I wish I can say that Melvin and I had the same track record when we actually did our first syndication, and we didn't. And it could be because we didn't have a successful business where we had a group of high net worth individuals that we can go to that knew us and liked us and trusted us. So it was almost like with our friends and family, I feel like it's. I think they know us and they like us, but the trust factor, they may say, "What's Jackie and Melvin getting into again?" So we didn't have it that easy. We definitely got a few investors to come over, and what we're hoping through, the social media, through the social media channels, and our podcast Get Diversified, that we're really sharing with our friends and family that this is real. And it's not just us doing it. It's other folks like you and other people that we have on our podcast that are doing great things, building generational wealth, saving on taxes and doing all these great things that you talked about that multifamily brings, as well as, the hard work that's involved in doing that. So Lisa, talk to me about how your interior design business is aligned with being a multifamily investor.
Sure. What we like to start with when we get involved with a multifamily project is even at the LOI phase, when people are putting in LOIs, we love to get involved as part of the team early because we can really assess the property with you and give you at least a budget range to plug into your business plan. So we do that a lot from the very beginning. And then once, you acquire the property, once you close, then our first step is typically taking a look at the exterior, the branding, and the leasing office. Those are kind of our first three things. So the branding is super important, like image and branding. Are you changing the name? Are you changing colors? What color is the brick of the property if you're not painting it, or are you painting it? We need to make sure that image and branding starts to be really cohesive throughout the property. So assessing, like, let's say it's red brick. What color is your logo? Does your logo clash with that? Is it good with that? What font style are you using? We work in conjunction with sign companies and ad agencies all the time with ownership teams to make sure that everything's cohesive moving forward. Can you find the leasing office? Is there good directional signage? As you pull up, is everything perfect? It can be a C-class property, but that leasing office should look amazing. Everything should be freshly maintained. So as little of things as you're walking up on the walkway to the leasing office door, is everything spotless? Is the rug perfect and straight? Is the rug clean? Are the plants watered? Is everything swept? Is it all clean? Is the front door freshly painted with no chips? Is the handle on the door fresh and new? When you open the door, does it squeak? These are all things that are subtle things that people don't really think about, but potential residents think about. When they're looking at 4 or 5 properties in one day to decide where they're going to live, you have about 15 seconds of when they get to that door to determine if they want to potentially live there or not. That's a very short time span to make that decision, but that's how we all are. We can tell, like, this isn't maintained. Something's not right here. That door's squeaky. And then once they open the door of the leasing office, what does it look like? What does it smell like? What does it sound like? Does someone stand to greet them? These are all tiny little things that subconsciously make you feel very welcome in a space. And that's what we're assessing. So the leasing office is usually the first project that we recommend because it should look like a model home. Even if it's a C-class property, it should look like a model home. And we've got to do something really memorable to catch their eye. And also then use those photographs on the website to get more people coming to look at your property. We've got to set your property apart from all the other properties that are, in the area. And that's what we do. That's what we're known for, is really dramatic designs, all budget ranges depending on the class of the property, really assessing the tenant base in the area. When we do the leasing office first and it looks amazing, we find that the occupancy goes up really fast. And that's what you're trying to do, is get that occupancy up. Once you get the occupancy up, then you can start increasing rents, So
Yeah.
that is the goal, is to get the occupancy up to 95% or more, and then start increasing rents, and just keep increasing and see where the stopping point, is where you start getting pushback, and keep that occupancy at 95% or more. And again, for 15 years, we've been working on these properties across the country, actually. And we find that, the occupancy goes up super fast. They typically sell the asset before 5 years. And the increase is just so high because we've elevated the tenants, we've elevated the property, we work on amenities, we work on the model unit, we work on exterior paint, unit interior packages, like you mentioned, like what are the packages going to be for the unit interiors?
Yep.
When you do a unit turn, when somebody moves out and you have to redo, what are we going to do? And we like to suggest do 2 or 3 levels, like you could do a silver, a gold, and a platinum, and you can test it that way. And they each have different things in them. One has, pretty basic, one has more amenities, another one has more amenities, and have different price ranges for those. And what we find is when we do the platinum units, which have more bells and whistles, even on a, let's say, B or B minus class property, those just lease immediately. And so you're getting a lot higher rents, for those, which can snowball over time.
Wow.
So we're part of the team, and we are here to take as much off of the ownership's team, plate as possible, and help increase the occupancy, increase the rents, and increase the value of the property overall.
Yeah, and give the tenants a much better place to live in,
Yes.
as well as improve the community. And I love that about it too. So, one of the things on my mind is I was talking to various property managers in our area, is that a lot of them are off-site and don't have leasing offices. So what would you recommend for, an apartment complex that doesn't have a leasing office to focus on, when it comes to design?
If it's a smaller property, so that maybe they don't have the leasing office, then what I would suggest is take an empty unit, stage it completely like a model unit, have it professionally photographed, destage it, and then put that photograph on the website.
Okay.
Make sure all the amenities look amazing. The exterior of the property looks amazing. Just have really, really good photography so that people want to, come see it. And then if you don't have the on-site, then making sure that that the response time is super fast.
Yeah.
People, owners say to me a lot of times, people don't really use their leasing offices anymore, but they do. We're there all the time. I mean, we're on site on these properties, and that's like a revolving door. Current residents are coming in constantly for all kinds of things, and you wouldn't think they would, but they really do. And then you have these potential residents coming in. And when we talk about the design side, there's really 3 things. 1, we're trying to get more tenants, raise the occupancy. 2, we're trying to get renewals. We want to make sure that renewal rate is really high, because it's so much cheaper not to have to do a unit turn. So saving budget, there. So what can we do with current residents to make sure that they have a great experience also? The leasing office looks nice, the whole property looks nice, the pool area looks great. Newsletters, monthly newsletters that get distributed to them with all kinds of free events in the area. Anything you can do to get renewals is super important. But the third thing is once we redo these properties, particularly the leasing office, we find that the on-site team is so much happier to come to work. They love this pretty new environment that they're working in. It feels good. They like coming to work. They feel like the property is being elevated, so they're real comfortable raising the rents and saying that with confidence. And we find that we have a much lower turnover rate once we've updated these properties. So it's kind of that 3, trifecta goal there that we're going after from a design standpoint.
Awesome. So we'll have to talk about what makes sense if we happen to get this building here in Pittsburgh.
Yes.
Offline as to what we should do, leasing office or no leasing office. It's something that we're whirling around in our head. But good points you brought about people being happy because they're in a nice place. They're working in a nice place, customers or tenants that come in. I keep calling them customers. Tenants that come in, they're happy, right? They see a beautiful office. They're excited, and all that just comes into play for the overall, tenant appreciation, or tenant landlord appreciation, and just the overall experience of the tenants. So love that. So where can people find you, Lisa?
I think the easiest way is to just email info@landrydesigns.com. So it's plural on designs, info@landrydesigns.com. And that will come through where I could assist with the decorating side of things, or if somebody's interested in investing. I have a investing company called Above and Beyond Multifamily. So that's, the investment side that I use whenever we're looking at assets that we're acquiring.
Fantastic. Well, everybody, thank you for listening. And Lisa, I wish you the best of luck, and I'm sure we'll be in contact within the next few days if we get this LOI. And thank you for sharing all this wonderful information and insights about the importance of interior design, or the decisions that are made when buying an apartment building, and how that impacts the tenants, just overall appreciation of the building, as well as, increasing rents and making it more profitable for the investors. So really appreciate all your insights. I'm super excited now, keeping my fingers crossed again about this opportunity. And I'd love to have you back on the show, and in 6 months to a year or something, to see, to talk about what else you have going on. And I hope that one day the Landrys can work together.
I love that. And good luck on
really
your deal. Good luck on your LOI. I'm so thankful to be here, Jackie.
Thank you so much. You have a great rest of your day.
You too.
Ciao.